Why don't we ever tell secrets on tax returns? Because it's never a good idea to try and cheat the IRS. Welcome to our channel, a treasure trove of financial insights. Today, we're unveiling the concept of tax efficiency and its significance for both individuals and businesses. We'll delve into tax basics, explore tax planning strategies, and even venture into the world of tax-efficient investing. So buckle up and get ready to navigate the world of taxes with ease and efficiency. Before we dive deeper, let's ensure we're all on the same page with some tax basics. Imagine taxes as the financial dues we owe to our government. These dues are used to fund public goods and services like roads, schools, and healthcare. They come in various forms, each with its unique characteristics. Firstly, we have income tax. This is the tax you pay on your earnings, whether it's from a job, business, or investments. The amount you pay is determined by your tax bracket, which scales up based on your income level. Secondly, we have sales tax. This is the extra amount you see on your receipt when you buy a product or service. It's a percentage of the purchase price and varies from state to state. Then there's property tax. If you own property, whether it's a home, land, or even a vehicle, you'll pay a tax based on its assessed value. But taxes aren't just about paying money. There are also tax deductions and credits, which can reduce your tax bill. Deductions lower your taxable income, while credits reduce your tax owed, dollar for dollar. For example, if you contribute to a retirement account or donate to a charity, you may qualify for tax deductions. With these basics in mind, we can now explore strategies to maximize tax efficiency. So buckle up, because we're about to embark on a journey to transform the way you approach taxes. Individuals, pay attention. Here are some practical tips to minimize your tax liabilities. Let's dive right into it. First up, consider tax-deferred retirement accounts. These accounts, such as individual retirement accounts and 401(k)s, allow your investments to grow tax-free until you withdraw the funds. By contributing to these accounts, you're not only preparing for your future, but also reducing your taxable income today. Next, let's talk about maximizing deductions. Most taxpayers are aware of common deductions like mortgage interest or student loan interest. But did you know that expenses like medical costs, state and local taxes, and even certain job-related expenses can also be deducted? It's worth taking the time to understand all possible deductions to ensure you're not leaving money on the table. Lastly, we have tax-efficient investment strategies. This is all about managing your investments in a way that minimizes your tax liabilities. For instance, holding investments for at least 1 year can qualify you for long-term capital gains rates, which are typically lower than short-term rates. Similarly, consider investing in tax-efficient vehicles like index funds and municipal bonds, which have lower turnover rates and are not subject to federal taxes. Remember, a well-planned tax strategy can result in significant savings. So start planning today and make the most of these strategies to minimize your tax liabilities. Business owners, we haven't forgotten about you. Let's dive into your tax considerations. When it comes to taxation, businesses face a different set of challenges. A primary concern is selecting the right business structure. Whether it's a sole proprietorship, partnership, or corporation, each structure carries unique tax implications. A sole proprietorship, while simple to set up, may subject you to higher individual tax rates. A corporation, on the other hand, could offer lower tax rates, but with the caveat of potential double taxation on profits and dividends. Partnerships and limited liability companies offer a blend of these characteristics, providing flexibility in income distribution and potential tax savings. Understanding the tax implications of your business income is crucial. This includes knowing the difference between ordinary income and capital gains, and how each is taxed. Ordinary income, such as revenue from sales or services, is taxed at regular business rates. Capital gains, which arise from the sale of assets, might be taxed at lower rates, offering potential savings. And let's not forget deductions and credits. Businesses have a wide array of these at their disposal, from deductions for business expenses such as office supplies and travel, to substantial tax credits for research and development or energy efficiency improvements. These can significantly reduce a business's tax liability. With the right strategies, businesses can also achieve tax efficiency. Investors, it's your turn. Let's talk about tax-efficient investing. This is about making the most of your investments by minimizing the tax bite. It's a crucial part of your financial strategy because the less money you pay in taxes, the more you have to grow your wealth. Firstly, consider holding investments in tax-advantaged accounts. These include individual retirement accounts, or IRAs, and 401(k)s. These accounts offer tax breaks like tax-deductible contributions or tax-free withdrawals in retirement. It's like having a secret weapon in your investment arsenal. Secondly, harvesting losses can be a smart move. This strategy involves selling investments that have declined in value to offset the tax owed on gains from successful investments. It's a bit like making lemonade out of financial lemons. Finally, utilizing tax-efficient investment vehicles can give you an edge. For instance, index funds and municipal bonds often have lower tax implications compared to other investments. Index funds are typically more tax-efficient because they're passively managed and have lower turnover rates, meaning fewer taxable events. Meanwhile, municipal bonds are often exempt from federal taxes and potentially state and local taxes as well. In essence, tax-efficient investing is all about understanding how taxes affect your investments and making smart choices to keep more of your money working for you. As always, it's wise to consult with a financial advisor or tax professional to tailor these strategies to your specific circumstances. Investing with tax efficiency in mind can boost your overall returns. Now let's touch on a topic that's often overlooked: estate and inheritance taxes. While it may be uncomfortable to plan for one's demise, it is essential to ensure your wealth is passed on to your heirs in the most tax-efficient way possible. One strategy to minimize estate and inheritance taxes is to set up trusts. A trust can be a powerful tool, allowing you to dictate how your wealth is distributed, while potentially reducing your estate's exposure to taxes. Gifting is another strategy. By gifting assets during your lifetime, you can reduce the size of your estate and potentially lower the estate tax that may be due upon your death. Lastly, don't forget to take advantage of estate tax exemptions. In the United States, for example, there is a sizable exemption before estate taxes kick in. Remember, these are complex areas and professional advice should always be sought. Proper estate planning can save your heirs a significant amount in taxes. It's not all about saving. Compliance and accurate reporting are equally important. Now let's delve into the realm of tax compliance and reporting. It might sound like a tedious task, but it's an essential part of your tax journey. Whether you're an individual or a business, you need to keep up with filing deadlines. Missing these can lead to unnecessary penalties and interest charges. Good record-keeping practices are your best defense against any potential disputes with the tax authorities. Keep track of all your income sources and expenses. Remember, an accurate record will not only save you from complications, but also help you identify potential tax deductions. When it comes to reporting, honesty is the best policy. Report your income and deductions accurately. Underreporting or over-reporting can trigger audits, penalties, and in severe cases, legal actions. In the end, staying compliant and maintaining accurate records is a crucial part of the tax puzzle. Staying compliant is crucial to avoid penalties and maximize your tax savings. Did you know there are tax credits and incentives you might be missing out on? These are like gifts from the government that can help reduce your tax bill. For individuals, there are education credits for those pursuing higher education, and energy-efficient home credits for those making eco-friendly home improvements. Businesses, on the other hand, have a plethora of opportunities. Research and development credits are available for those pushing the boundaries of innovation. Also, depending on your state, there may be specific tax incentives designed to stimulate local economic growth. But remember, these are not automatic, you have to claim them. So it's crucial to stay informed and understand the available opportunities. Work with a tax professional or use reliable tax software to make sure you're not leaving any money on the table. Take advantage of these credits and incentives to further enhance your tax efficiency. Want to give back to society and save on taxes? Let's talk about tax-efficient charitable giving. Consider donating appreciated assets like stocks that have grown in value over time. By doing so, you avoid paying capital gains tax and can deduct the full market value of the asset. Alternatively, you could set up a donor-advised fund. This allows you to make a charitable contribution, receive an immediate tax deduction, and then recommend grants from the fund over time. Charitable giving can be a win-win situation when done in a tax-efficient manner. We've covered a lot of ground today, but remember, Tax planning is not a one-size-fits-all approach. From understanding the fundamentals of taxes, to exploring individual and business strategies, to delving into tax-efficient investing and estate planning, it's clear that optimizing your tax situation requires a tailored approach. And with the right information and tools, you can maximize your tax efficiency and savings. Thank you for joining us today. Don't forget to subscribe, like, and hit the notification bell for more finance tips and strategies.